Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. Global stocks are set for a sixth straight monthly gain, with Chinese equities gearing up for their best quarter in a year. Looking at gold as well, hitting a new record as concerns mount over a looming U.S. government shutdown.
And China is set to release September's PMI data, and it could provide more evidence of a slowing economy.
Also, head sources tell us Huawei will ramp up production of its most advanced AI chips over the next year as NVIDIA struggles with geopolitical headwinds.
I'm Lin Lo, live from the Hong Kong Exchange, where Zijin Gold is set to make its debut after the world's largest IPO since May.
Good morning once again. Welcome to the show. Lots to get through from this massive IPO here in Hong Kong. It's the end of the quarter. We have a ton of data coming through in the next 60 minutes or so as far as the Chinese economy is concerned. The green you're seeing at the bottom of your screens in the benchmark is likely down to what we're seeing early in the Taiwanese market as it comes back online. Today, it's also worth pointing out that it is also the last, speaking of going online and offline, the last trading session, flip the boards please, of the Chinese mainland market before we head into this sort of week-long break for Golden Week. Dollar story is one that is to the upside. A lot of that in the last 15 minutes or so following news out of Donald Trump and lumber and tariffs there. When you look at what's been taking place in the Bloomberg Dollar Index, yep, certainly towards the upside. But yeah, I mean, are we going to make a move back to 150? Certainly it's been in the conversation on dollar yen. We talked about gold, so this is really the intersection of many things. Risk aversion ahead of a looming shutdown in the U.S. at the government there. Again, this IPO, which we'll get to in a moment, and of course, Brent, alongside the progress that we're seeing there out of the Middle East conversations around Gaza and Donald Trump. Flip the page, please, and have a look at where we are overnight and this rally. And we've talked about this 5 straight months of gains on a monthly basis, best quarter in about a year. So Golden Dragon Index up overnight. A couple of other stocks to track going into the open. Today, tech has been really in play for the most part of the last month or so. A50 futures are coming online, and we are looking at CGB yields and, of course, dollar China. And we talked about this in about 18 or so minutes. The official PMI numbers are coming through. And, of course, RatingDog, that's the private survey, it's also coming out. Quite rarely you get those two things on the same day, but yeah, we'll be getting them, Yvonne, in the next 60 minutes or so.
Yeah, we're not looking in terms of what to expect. Any favorable numbers, but I think after what we saw in that industrial production number over the weekend, that might be different, right? And it really kind of changed the whole sort of sentiment around this market, that it may not be just AI driven anymore or liquidity driven. We're talking about maybe earnings led sort of growth, potentially, right? Once now we start to see anti-involution and the like really make its way into the numbers. Yeah. We'll see if that continues with the PMI data here today. In terms of your agenda, though, yes, as we talked about, there's a big IPO, the world's largest IPO this year, which is Zijin Gold, set to start trading there at the bottom of this hour. The PMI data, as we mentioned, though, small caps watching gold miners, just given that we hit another record high for gold, and perfect timing for Zijin Gold to kind of trade today as well. In terms of stocks, there's things like Zijin Heavy, Next Chip Semiconductor. What are we focusing on that?
Yeah, so these are, speaking of the listing, right, these are the two companies, and we're watching the A shares today. Oh, well, the only A shares. They've actually come out and filed for a Hong Kong listing as well. So this is certainly something to watch in the Asia market. Again, alongside this massive fundraising and listing that we're seeing out of Zijin Gold today.
I mean, I think the fact that Hong Kong can take and boast that they've had two of the largest IPOs and listings this year is quite a big thing for Hong Kong. So certainly that's one thing. And it maybe there's another reason that we can see this rally continue, right? I think yesterday was quite of a golden moment, as you could say, leading up to Golden Week. Usually we don't see trading activity and volumes the way that we did yesterday. There is a lot of optimism heading into this Golden Week holiday. And for once, people are actually quite optimistic about the consumption sort of things that they could be seeing from this 8-day holiday as well.
Yeah, I think we've already had some estimates coming through as far as the travel volumes are concerned. I can't remember the last time we went into a long holiday where the narrative was don't take risk off the table, lead into risk going into it, because there is a lot of optimism and momentum going into this. And simply to underscore that is this one specific statistic of 5 months of gains. We are set to outperform Chinese equities over U.S. equities for the first time in 5 years. I think the outperformance is 25 percentage points year to date so far. But really, what a way to cap and bookmark and this exclamation point. What's really been a terrific quarter. Zijin Gold ahead of Golden Week.
Yeah, and let's keep on this whole golden theme, right? And talk about Zijin Gold. Now, this jumbo listing, and bring in our team, our China correspondent, Min Lo. She is joining us live from the Hong Kong Exchange. Also want to bring in our Bloomberg Intelligence head of Asia, Metals and Mining and Sustainability, Michelle Leung. Min, I'll start with you. Obviously, we've been anticipating this one for some time now. We certainly saw the gray market was quite upbeat yesterday. What can we expect today?
Yeah, it's really exuberant. It's really packed at the Hong Kong Exchange because there are 3 listings happening today, and you can see behind me, I think the chairman of Zijin Mining is up there taking photo with Bonnie Chan and others as well. But demand has been really strong, as you said. In the grey market, share prices were surging as much as 56% at one point. It's 240 times oversubscribed for the retail portion of the shares. And also, the company has managed to line up a pretty strong lineup of institutional investors, including the Singapore Sovereign Wealth Fund, GIC, as well as BlackRock, Fidelity, among others. And that is really going to solidify Hong Kong's standing as the largest IPO market in the world for the first time since 2019. And there's a lot of interest for this stock, partly because of the macro environment, right? You look at how gold prices had surged this year, up by over 40% year to date. That really light a fire under many of these mining stocks, including the parent company Zijin Mining, which is seeing its share prices up by about 120% year to date so far. The company has said it's going to use these funds to expand overseas investments, including to help settle an acquisition of a gold mine in Kazakhstan, and also to help construct and upgrade existing mines over the next 5 years.
Yeah, well, Michelle, let me bring in. Min mentioned, of course, this massive move up in gold prices, nearly 50% year to date. Talk to us about the valuation of this listing today, discount compared to its global peers.
Sure. Well, it's definitely the best timing for Zijin Gold to go listing today, as we see the gold price, as you mentioned, is more around 50% year to date, and we still see more upside given the weaker U.S. dollar outlook. We are seeing that it will hit or break through $4,000 per ton per ounce very soon, and then that will literally give a further boost to the global gold miners' valuation. So, in our recent research, we actually did a average EV per reserve valuation for the global gold miners. We see that for them, the average is around $1,050 per ounce, and for the medium player, it's even higher at around $1,130 per ounce. So, in that front, if we take a look at the Zijin Gold International's IPO evaluation, is trading at a 26 to 31% discount to that. So, well, today the gray market, we already see that the market has been very very optimistic about the outlook. So we will expect a further boost from there. And we also did another research. We see that the global gold miners, actually, the share price has a very big improvement in terms of the correlation with the gold price. So even Zijin Mining, this company actually its core business is from copper, but we also see that the correlation between its share price and the gold price has significantly improved. So it has underscored the market's overall broader sensitivity to the gold price performance.
Okay, what does it mean for Zijin Mining itself and the valuation there now that we have this separate IPO?
Sure. Well, of course, it will help to unlock its gold assets. And this overseas unit actually only accounts for like half of it. It still have a lot of resources in domestic. And also we did an sum of parts valuation for Zijin Gold and for Zijin Mining as well. We have priced in different segments of its business like gold, copper, lithium, zinc, and lead. And of course, as I said, copper is the largest one, but if we factor in this more than 50% jump in the gray market for Zijin Gold, actually its valuation has been priced in already at this moment. But as I said, if the gold price continues to surge, then it will certainly give a further boost on that. And I think On the other hand, this IPO, the proceeds is a huge amount.
Yeah.
It will certainly help to help Zijin Mining to expand as it's wished. It aims to become the top-tier global gold miner with a 100 to 110 tons of gold per year output.
Nice. Okay, team, thank you so much. Min Lo there at the exchange. And, of course, Michelle Leung out of Bloomberg Intelligence here with us on set ahead of this massive listing. And this one is look set to fly going into the open today. Right, just ahead, this is really one of the topics of conversation. We'll be asking and speaking with the CSOP Asset Management CEO when she joins us later and shows this red hot, this piping IPO market, this bull market, and also how they in the industry are tapping this renewed demand, these flows coming through out of mainland markets and mainland investors coming into Hong Kong. Ding Chen joins us at about those times on the screens. Counting down to the open of trade, 19 minutes away, Shanghai, Shenzhen, and here in Hong Kong. This is the China Show. Good morning. Right, welcome back. The final trading session of the quarter, and we are looking at some gains across futures right now. So there is a lot of momentum, seemingly almost at 1 a.m. when you feel like there's a lot of momentum and those tequila shots come out that momentum will further build into the wee hours of the morning. But who are we to speak? Best quarter so far in about a year for Chinese equities. 6 months, I believe, of gains across global equity markets.
Yeah. That hangover lasts way longer now, too. It's not quite worth it when it comes to tequila
I'm still
shots.
hungover, actually, from last week.
6 months of gains, right, when it comes to global equities. Let's bring in Kerry Gregg, global market strategist at JPMorgan Asset Management. He's in town. Great to see you, Kerry. Can I still expect a year-end rally for stocks?
Well, there's a lot of positive momentum in the market at the moment. I think that's justified. We've got easy monetary policy coming through. We have strong corporate and household balance sheets that's supporting that. We've got a pickup in capex around the world. These are all good things for thinking about leaning in towards risk assets over the next year or so. I mean, we are mindful of valuations going up and credit spreads getting tighter across the bond complex. So I think a near-term period of consolidation wouldn't be unwarranted. Right now, it's just figuring out what would actually trigger that. Is it going to be some sort of macro growth shock, a repricing of the outlook for Fed policy rates and move higher in bond yields? It's kind of figuring out what would cause the market to sell off right now when there is so much positive momentum out there.
Is there anything visible to you as far as potential risks or catalysts to what
I think
might
when it comes to that growth stock is the one we'd be most focused on right now. Obviously, there's always policy when we think about the narrative we hear out of Washington. But I think if we look at, say, the non-farm payrolls numbers, any further signs of excessive weakness in the economy, that fading of that recessionary fear has been a big driver of markets. If that started to creep back, we'd start to think more around the outlook for earnings, which has been underpinning the market rally. Or if we did see a big repricing in terms of we've got a lot of better growth coming out of the US. If inflation gets up a bit, we don't see that fall in the jobs market. Maybe the market starts to price out some of those rate cuts that have really been, again, fueling the rally. And that would be another reason to say maybe those valuations become a little bit harder to justify.
I mean, if we get those data points and the jobs report, right? A U.S. shutdown could, sideline some of those data releases. Do I need to worry about this government shutdown in the U.S.? Like how far up or down the list of worries should that be?
It's further down. I mean, how many times have we been through this in terms of the US government?
14.
Yeah,
since 1981.
It's been a few now. The market does become less sensitive to these things, and it's always about the duration. So this could last a couple of days. It could last a month. It's when it starts to last longer, that's when you start to worry about it. And in the past, the precedent has been that, any weakness we see in the economy tends to get unwound when, workers start to get paid again. I mean, there could be some concerns around, job layoffs coming into that from the government department if that's actually what we start to see through. But I think for the near term, it's the fact that maybe you don't get the non-farm payrolls, maybe you don't get that CPI print. It becomes a little bit harder for the market to then think about what does the Fed, what does the market start to digest around that data.
Is there still a need? I mean, are you still hearing from clients that there is an interest to diversify away from the U.S., or how's that debate evolving now? Yeah,
I mean, that fading of the US exceptionalism theme, that was a big one that came through. It's come back a little bit. I think that's been driven by the fact that we've seen still strong performance out of the Magnificent Seven, the mega cap names out of the US. That's kind of refueled that to a certain extent. They have been driving the bulk of the earnings coming out of the US. So there's been a little bit more towards maybe there's still more to go in that US story. absolutely you're seeing increased global diversification towards Europe and Japan and increasingly towards emerging markets. You've seen the weakness in the dollar and those rate cuts come through. So again, that valuation relative trade between the US and the rest of the world is still very compelling to think about other equity markets around the world and building in that diversification as some of the hedge against that risk that you do get a bigger policy shock from the US.
We're also trying to figure out to what extent this Chinese market, which has done well, has really come back into the sort of global consciousness. Based on your conversation, do you think this stigma around China, the comeback, has it moved beyond the tactical allure? In other words, is it now back in a very big way?
I think in some regards, we're looking at the sort of non-US tech theme, what we're seeing in the AI developments in China.
That's right.
Obviously being very different in terms of the approach, being a bit more open source into how it's coming through. The fact that the CapEx story is quite far behind what we've seen in the US. We're going to have about $300 billion in CapEx in sort of the top hyperscalers in the US. You're getting about $50 billion out of the equivalent ones in China. So a lot of room for catch up. So I think that's something where you can see more of a longer term secular theme playing through in terms of the China outlook. Beyond that, there are still some concerns around, where's the fiscal support coming through? How well will this anti-evolution policy actually play out in driving profits higher? And in the meantime, you still have, fairly moderate outlook for growth coming through that's sort of below that 5% target.
So, it seems like right now it's all liquidity driven. Might we see something where there's a pivot to growth now, where you're starting to see anti-evolution campaign, you're starting to see these efforts to really curb overcapacity really play through in earnings, that you could actually see some sort of earnings-led recovery? Would that change your mind when it comes to
earnings have been pretty low. They're sort of coming off the bottom. I think you really need to see a greater justification. It really needs to see the proof in the pudding, as it were, with China relative to the other markets where the expectations are a bit higher.
Yeah.
But I think with China, investors are still looking at it and saying, I kind of need to see these policies evolve and I need to see the proof that they're actually working.
Yeah.
But I still think there's an interest in the fact that you do get a Chinese market where the equity is uncorrelated with what you're seeing in the other world. It does provide a diversification benefit, and there are pockets of interest there. But, we look around the world, is it as compelling as, say, what we're seeing through the Asian tech cycle in terms of South Korea and Taiwan? Yeah, it still fits into that narrative. Again, it's broader diversification that we see being built into portfolios.
Let me take advantage of you being here. There's an RBA rate decision today. Mining's come back in a very big way as a theme. You look at gold, for example. Iron ore has been pushing, I think, 106, 107. So how do I look at the Aussie market, right, in light of policy and momentum?
Well, the Aussie equity market, obviously, valuations again are a bit of an issue. The concentration in that, given that's been driven by banks and a few other companies, is really something that's come up before. That's not unusual, though, for an Australian investor to have that concentration risk. It's obviously been around the tax benefits of investing in those companies that are high dividend earners that get tax benefits with that. I think the realisation is, though, that if we look around the world, we look at the relatively low earnings growth estimates for Australia, it's probably more likely to be a funding source than anything else for looking at better opportunities. And if we think that back in terms of what the RBA is doing, they have been very cautious around their policy easing cycle. They were very gradual on the way up. They're being very gradual on the way down. The inflation numbers that came out a little bit higher than expected. Growth's been doing a little bit better. Retail sales a bit better. I think they'll be hesitant to want to signal further easing from here. However, I do think they will have another rate cut in November when they meet, when they get more of the quarterly inflation print in line, and they can really actually say, yep, we're heading towards what we think is the appropriate rate of inflation and growth in the economy, and we're still relatively restrictive when it comes to the policy rate.
Kerry, thank you for taking the time to carve out some of your time, of course, to see us here. Kerry Craig, there, global market strategist at JPMorgan Asset Management. Okay, the listing, this massive IPO, we're now looking at a official price in the pre-markets, 56% to the upside on Zijin Gold, coming up on your screens very, very shortly. Ooh. There we go.
That is a good day to come. And
best
just
day on
before
record.
Markets are shut in China, right? So before that Golden Week holiday. So things looking pretty golden for Zijin Gold as we continue in the rest of the pre-market. Now, as we talk about, right, we're hitting some pretty good superlatives when it comes to MSCI China here as well. A fifth month of gains potential that we're set to gain as well. Plenty more ahead. This is Bloomberg.
President Trump and Israeli Prime Minister Benjamin Netanyahu have agreed to a 20-point plan designed to end the war in Gaza. But it is unclear if Hamas will accept the proposal, which calls for the group to relinquish control of Gaza and release all hostages. Let's bring in Derek Wallbank, our senior editor, joining us right now to talk us through this 20-point plan. And at least there is a path towards that outcome, Derek. What do we know and where does this go?
Well, yeah, maybe, David. And the key question is whether or not Hamas is going to agree to any or all of this. They're going to be under a tremendous amount of pressure so to do. But this works out to being essentially a 20-point plan proposed by President Donald Trump that he's gotten Israel to agree with. Now, not everything in here is are things that Benjamin Netanyahu has necessarily wanted, but the basic gist of this offer that the president is making is take it or leave it. He said in no uncertain terms that Israel would have his, quote, full backing to finish the job if Hamas rejected the offer, right? So the stakes of this are fairly clear. But the idea here is a sort of managed transition, a sort of technocratic state management sort of system that would come in, that Trump would be a part of this. Former British Prime Minister Tony Blair would be a part of this. The idea is that Hamas would give up all of the hostages. There would be a prisoner exchange. They would give up all of the hostages' bodies for those who are no longer alive as well. Israel would have a prisoner release as well. So there's a lot of that. But this adds contours to something that really has already been rejected, but it is put in a sort of take it or leave it kind of basket.
Yeah, a new approach from the Trump administration, it seems, as well. We'll see if Hamas has any sort of response. Derek, thank you. Derek Wallbank there, senior editor, joining us out of San Francisco. As we move away from the geopolitics, we're talking a little bit more about these markets in China. And it looks like we are continuing on with this rally with the Hang Seng up about 1/5%. We're still watching Zijin Gold. That one is up, was up some 50% or so in the pre-market as well, kind of following the moves that we saw in the gray market overnight. And HS Tech, once again, having a good day. There you go, 55% gains for Zijin Gold.
Yeah, what a time to list. This is really the intersection of many of the major bullish themes in the markets this year, whether that's gold, whether that's fundraising, of course, and the company that intersects really is this one right here.
Yeah, and you talk about the valuation, right? It's about a discount about 20 or some percent from the global peers. So, you know, there is some potentially some more legs here when it comes to where this stock can go, and a bit of catch up here. So yes, we'll have much more coming through live from the Hong Kong Exchange when it comes to Zijin Gold. The banging of the gong coming up next. This is Bloomberg.
Welcome back. You're watching the China Show, quite a big one as we approach the open today. Zijin Gold is set to debut. We're up 55%, give or take, in the pre-markets. And does it matter if that gong is brass or bronze? Because truly, in a couple of seconds, we'll be getting a truly golden moment
They
there.
should have added some gold to it, shouldn't they? Just for the occasion.
Maybe to mark the one-year anniversary after this.
Oh, yeah. But certainly there's record highs for gold. Certainly the timing is just perfect here as well. Of course, they do, this is the spin-off for, in some ways, to their international assets. So, yeah, they've got a chunk of money now that they can do in terms of acquisitions and the like. But certainly a lot of anticipation from this as well. We talk about that valuation discount from its global peers. It's about 20 or some percent according to BI. There we go. I missed it. Sorry.
That's okay. There'll be one tomorrow.
They do it a few times.
Yeah.
We got 3 up there. There you go. $3.2 billion raised there from Zijin Gold. And, today we continue to see punchy gains when it comes to this company. And now Hong Kong can say that they have had 2 of the largest listings in the world this year, right? Zijin Gold and CATL back in May. This is the IPO, of course, which is Zijin Gold. So certainly this is a big one.
Yeah, okay. We're looking at, as you sort of digest some of these pictures and the ceremonies taking place there at HKX, and we're also looking at the open. It's also that time where we are getting the PMI numbers coming through. And so let me just go through some of the numbers. And in about 15 minutes or so, we'll be getting another set, of course, the private numbers. But before we get to that, okay, 49.8 is the manufacturing PMI numbers. This is for September, obviously, going into the last session, last calendar date of the month. Non-manufacturing coming in slightly below estimates at 50. Estimates were for 50.2. I should also note that the manufacturing one came in slightly ahead of estimates at 49.8, but still obviously in contraction territory, which I believe is the 6th month that we've seen a sub-50 read on manufacturing, and I think we've really yet to see what the details are looking like as far as the sort of subcomponents are concerned.
Yeah, from Bloomberg Economics, they were expecting even a weaker print, but they say that there is a further slowdown here. Policy seems to be fading in some ways, and construction. I mean, you're actually past the peak season now, so construction may keep shrinking in what should be the peak season right now. So signaling policy support is very much needed, especially when we talk about investment. Right, what we saw in investment in the last a data dump there was that things were looking pretty slow there. So despite this market rally that we're seeing, services also probably lost steam as the summer travel ended as well. So that's one to watch here, of course, as we look at the non-manufacturing side of things.
Yeah, okay. So we're looking at the open as well. Flip the page, please, very quickly on Hong Kong markets. As we were pointing out, the best quarter for Chinese stocks in about a quarter. So speaking of listings, coming up very shortly as well. So we'll talk about this big one in a moment. But you have two other companies that have filed for Hong Kong listings, in fact, as right after the close yesterday. So those two companies are coming up on your screens very shortly. One is listed in Shenzhen, the other one is listed in Shanghai, and we are seeing some upside in both those ones, of course, on the back of those filings. And speaking of one that has made it to market, IPO is done. They've raised quite a bit of money, and I think when you look at how the price is doing in the first session of as a traded company, you got to wonder if you're a banker, did I leave some money on the table here? Looking at 65% pop in the shares. So there we go, $118 a pop, up $47 in the first.
Let's bring in our China correspondent, Min Min Lo. She joins us live from the Hong Kong Exchange on this very good day, Min Min, for Zijin Gold.
Yes, indeed. Share price continuing to gain in the opening moments of the start of the trading session, and you saw the gong ceremony earlier. It's a really proud moment for Zijin Mining. I heard the speech by the executive director of Zijin Mining. He was talking about how this is an important milestone for the company. He recalled the moment in 2003 when Zijin Mining first listed here in Hong Kong, and he talked about how the market cap of the company has flipped about 197 times since then, and now it's another milestone as they spin off another subsidiary, the Zijin Gold, into a separate listed entity. And demand, as you can see with the share price, it's been very, very strong. The company has also managed to secure a very strong lineup of institutional investors, including the Singapore National Sovereign Wealth Fund, GIC, as well as the likes of BlackRock, Fidelity, Hillhouse Investments, really helping to solidify Hong Kong as that largest IPO market this year.
Okay. Min Min, fantastic. Min Min Lo there, our China correspondent at the floor of the stock exchange, ushering in yet again another gold, well, this specifically, literally a golden listing here. We'll have, in fact, more on this in a moment on Zijin Gold specifically, really, and what this means for the company, the unit that was where it was carved out from, and of course Jefferies comes on as well. And really, when you get a stock price gain like today, 65%, what is the appropriate multiple longer term that investors should be attaching to a price like this outside and days after the exuberance sort of fades away? Okay, speaking of a golden time to list, it's been really good to be, of course, long these markets, and with the rallying Chinese stocks, flows into Hong Kong listed ETFs have surged over 180%. First 8 months, 183% specifically for the first 8 months of the year compared to the same period last year. It's about a growing investor appetite here. Yeah,
when it comes to Chinese tech, and that in particular is sort of the darling trade here, right? And for major ETF provider CSOP Asset Management, CSOP I should say, they've been seeing the AUM of its ETF tracking the Hang Seng Tech Index doubling from the start of the year. Joining us exclusively on set now is the CEO, Chen. Chen, it's always great to have you. It's been a busy year, very exciting year with you, given with ETF Connect and the like. You're just about to launch a few more ETFs. I think 4 in total have already been planned. How has business been so far?
Thanks, Yvonne and David, for having me here today. So the business, as you said, business is booming and is incredibly good for 2025. And like you said, our flagship product, 3033 Hang Seng Tech Index ETF, doubled AUM. And also the performance is very, very stunning. These products are more than 40% for this year. And also we have some other very interesting products because of investors, attention goes to tech and other, like biotech as well. Because Hang Seng Tech, everybody talking about that every day, so I want to spend a little bit of time talking about the biotech or other. I think that is the future stock. So the ticker is 3174. It's a Hang Seng Biotech ETF. So for that specific ETF, this year it goes up more than 100%, the performance, and also the AUM goes up like 3.5 times compared with for the year end of 2024. And I think behind the thing is these specific products is because, first of all, people have lift up their expectations because of the AI implementation on the pharmaceutical industry. Second big reasons for that push up is because the U.S. pharmaceutical company dominate the industry, but for recent years they are facing significant sort of patent cliff. They don't have much patent to use, so they began to purchase patents from other countries. So for this year, they already purchased like $50 billion patent. And probably you remember this year, Pfizer purchased a patent from 3S Bio.
Yes.
Yeah. So like 1.25 billion. Yeah. So those companies, they are not that big. So this sort of catalyst is really trading up, make the share price goes up quite a lot. And also, I think, China economy is because in the past it's only like a labor benefit. Right now it's engineering benefit. For instance, like a CXO engineer in U.S. compared with China, the China cost is like 1/6 of the U.S. cost. Yeah. So that means there's a lot of acquisition sort of activities happening in that industry. And also probably people were concerned like, the geopolitical tension between China and the U.S. Right. There's a lot of, but you can see at early of this year, Trump administration also tried to pass a Biosecure Act in U.S., but that act fails. So that demonstrates like the pharmaceutical companies in the U.S., they really have the big lobbying power, to can protect their free trade or their industry. So we will see, that one is also, in the future will draw more and more attention as well.
As certainly investor interest, not just from mainland China, but global investors have returned to the Hong Kong markets. How are you planning your business around this renewed attention that's back to Hong Kong? As you look into the fourth quarter, into next year, are there specific strategies or tweaks to your strategy that you're looking to do as a business? Yeah.
So I think for this year, we will say, Hong Kong, China really begins to go back to the center of global capital markets. We can see more and more interest coming from, especially region countries. So recently we went to Korea to have a roadshow. We find out, the people are enthusiasm about China economy, China's AI, because people feels like, obviously, like Yvonne just said, those AIs are trading darlings for investors. Yeah. So people will see like, for U.S., obviously, they have a lot of innovations, a lot of new products, a lot of new things. From supply side, they have a lot of things comes out. But, if you have tried to have a deal or trade, you need to have supply and also demand. So in between of this, you have to have something, very good applications to make a deal. So people will see like Chinese in the past, in the Web 2, Chinese companies always can produce the best application like Tencent, Alibaba, TikTok. So people will see, in the future, they don't want to miss the opportunity from China. And Hong Kong, we have a lot of IPOs. You can see like IPOs like
every hour.
every hour, every day, right?
Yeah.
So because, for this year, we have a lot of significant companies to come to the town and make Hong Kong, in the past, Hong Kong is a proxy of mainland China's capital markets or economy. But right now, more and more important company comes to listing on Hong Kong. So make Hong Kong's capital markets, the depth of the markets significantly improved. And people will view this as a really hub to invest into China. So I would say it's a long-term, I'm very positive to Hong Kong. So that's the, that's the thing. When we go out to do the marketing, people are getting very interested into Hong Kong and also participate in those, IPOs.
Yeah, and tell us who these ETFs that you're about to launch. I think there's a Hang Seng US Tech one coming up as well. What's the client type that you're targeting? Is it the institutional investor? Is it retail? Or is it more these wealth management sort of platforms?
I think they are all our target clients. So in CSOP, we probably have roughly the institution versus retail is like 54, 55 is coming from retail, and the rest is coming from institution. So we'll see that more and more, people, retail and institutions are getting into this market.
A lot of the reason why things have worked in the markets this year is because there's been so much liquidity in the market, right? The reason IPOs can get absorbed, reason why ETFs like the ones you guys launch are so well received. Is there any reason to believe the liquidity taps end, or is that an assumption that you think industry market players can expect to continue well into next year, that there will be this abundance of liquidity in Hong Kong?
Yeah, you're very right. So the liquidity is the main reason to drive this market, to up towards. And I think, they will continue for a period of time. The reason is because the Fed is cutting their interest rate. People are pretty much, from retail institutions, they are all on the risk-on mood. So people are more willing to put their money, get rid of from the banking account to like the stock market, especially, in China. China, the rates is very low, and we will see, but we are still not to see the major trend from like the bank savings, relocate to the capital markets. But we will see that. So I think it will be relatively,
Do you think we're just at the beginning of that? Just as a final question too. And what's the strongest sign that savers are about to unleash those bank savings into the market?
I think, from mainland China, we didn't, see that trend. We see that trend begins, not see the major wave comes yet. From other countries, probably are different.
Right.
But from China or Hong Kong markets, it's slightly different. So, for past decades, the biggest trend for the global economy is globalization, right? So right now, it's probably fragmentation. It will be trend. Okay. So people try to diversify. So that's why we'll see, the liquidity, not from domestic, but also from outside of China or Hong Kong, will come to try to do the diversification as well.
Chen, it's great to have you, CEO of CSOP Asset Management, joining us here in our studios. Coming up, Huawei is said to be planning to double its output of its highest level chips to challenge NVIDIA's dominance. We have details of that scoop coming up next. This is Bloomberg.
RatingDog, that's the data set that previously was known as the Taishan numbers, right? Am I correct? But anyway, that's the one that's coming out. This is a private PMI survey that's out, and the September print is coming in well above the estimates of 50.2. So I think this is largely in line with the official numbers, which also came in slightly above the expectations here.
So non-manufacturing was still above, so 50 at least, right? So 52.9 on the services on the private side certainly is a pretty good number. And yes, maybe it's a good indication of how this Golden Week holiday is going to fare in these 8 days, right? So certainly there you go. We're seeing a little bit of movement in the renminbi, though. It looks like it's more about reversing some of the initial strength here right now. But in particular, we're watching, we were just talking to Chen about, this whole AI trade and how everyone's really capitalizing on it, and some of these ETFs here as well. Take a look at how these China chip stocks are doing. So there's been some updates, right? So there was a DeepSeek model update. That was one thing. Then there was now this Huawei story, right? So according to our sources, we've been told that the tech giant is about to give a boost when it comes to their output, a double of its output of its top AI chip. That certainly is boosting sentiment across the sector. There you go. Huawei Semi is up close to 5%. SMIC is up some 3%. Let's bring in our Asia Tech correspondent, Annabelle Jewelers, here on this scoop that we just talked about. I mean, doubling output is certainly a headline that grabs attentions, but what do we know so far, what they can do?
It's such a great story from Gao Yuan over in Singapore. So that, it is a Bloomberg scoop for us. So what this relates to is the Huawei Ascend series. So Ascend is the line of AI processors that have been designed specifically for AI workloads. And the chip we're talking about here is the 910C Ascend chip. And as you said, they're looking to double production next year. So this year, you're around 300 to 350,000 different chips. Next year, they're looking to go to 600,000. If they are able to do that, because this is our scoop, we're hearing this from sources, but if they can do that, it's a sign that they're managing to find workarounds with their main foundry, that's SMIC, of course, but finding those workarounds because this is a company that's faced extensive restrictions, sanctions from the US as well. And so, it would be quite an incredible story, especially in the highlight or in the backdrop of what is the NVIDIA story in China, which is, of course, a sort of not necessarily a retreat, but certainly pressure that Beijing is putting on companies to not be buying NVIDIA products. So Huawei are looking to fill a little bit of that gap.
And it's not like this was a flip of the switch. Output had been improving. And recently. We
saw that even over the summer months. We were hearing that output was getting better, and you're starting to hear as well. I mean, this year or this quarter particularly, we've just got so many more updates on advancements and innovations that you're seeing from, say, chip equipment manufacturers in China, because that's a key bottleneck. But there are big restrictions that this company faces, and you can't really look past those as well. I mean, it's still stuck at 7-nanometer production. You compare that to TSMC, that's supposed to be ramping up to 2-nanometer production just this quarter. So that's a big gap. It still faces a big equipment shortages as well, because the most advanced is EUV, extreme ultraviolet lithography machines that you get from ASML. They can't access those, so they're on deep ultraviolet technology, or DUV instead, and that leads to lower yields essentially because the production quality is inferior. Another issue is with access to HBM. That's a story dominated by Micron, SK Hynix, Samsung, so issues there. So they've kind of had to pursue a sort of different architecture for their chips as well, that's more of a network-based strategy rather than single chip performance, which they say leads to ultimately a product that has similar performance, but it is certainly more complex and more energy intensive, and not something necessarily that is something that partners want to see outside of China. But, I mean, the view from our Bloomberg Intelligence team as well is that this is something, again, companies like Tencent, Alibaba, Baidu that are facing chip shortages, Huawei can be an option.
Still not enough, though, they said, to fill the demand.
No, well, it's 2.5 million chips this year in China, according to our estimates. And Huawei could be looking at 1.6 million dies next year. So, that is a gap, of course,
of about, I wonder who fills it then. Belle, thank you so much. Annabelle Jewelers there, our tech correspondent there. In fact, I think on the weekend, Jensen Huang was talking about, I think this was on a podcast, right? That China's nanoseconds, simply just nanoseconds behind the United States. This is really one part of the bigger puzzle we're trying to fit in today, of course, around U.S., China, and Taiwan. And really that goes into TSMC versus SMIC. And Karishma Vaswani, of course, has his speech. She'll be joining us later on to really help us unpack really the broader geopolitical implications of all of this, the grand plan that Belle just lined up just there, and how that fits into this rivalry for semiconductor supremacy. That's coming up in the next hour of The China Show. Right, welcome back. Just recap some of the data coming through that's come through this hour so far. Generally okay. I think it's one of those instances. Kind of reminds me, when I went home with my decent report card, coming in slightly above what was expected. Not a blockbuster number that would merit, I guess, a massive gift from the parents, but yeah, it was something that certainly wouldn't mean them pointing to the door and disowning me. But yeah, decent set of numbers coming through here.
Yeah, I mean, still you're starting to see that slump, right? 6 months in the factory activity. That is the longest that we've seen since 2019. So that certainly is something of concern, right? And whether we are going to see that sort of policy push in the back half of this year, it seems like, according to our survey, most are not that optimistic that we're going to see some substantial sort of stimulus and support here as well. But yes, another check of markets, we're watching still gold prices and the like, right? And Zijin Gold certainly is the spotlight here today, soaring in that Hong Kong debut after the world's largest IPO since May. There you go. Close to 60% gains for Zijin Gold.
Looks like it's outperforming its peers currently. More of this, plus the economy in a moment. The second hour of the China show is coming up.
Welcome back to the China Show. A look at the HSI half hour into the session. And yes, we're coming on the back of the last day of trade before that Golden Week holiday. So there you go. China's markets will be shut for 8 days. You're seeing the Hang Seng still seeing some decent gains here as we count down to that long holiday. So we're leading into the end of this on a pretty risky sort of sentiment overall. And you got to thank the tech space, the chip space, even the gold space here today, Dave.
Yeah, it doesn't seem like we're heading into
a holiday.
A holiday at all, right? When usually its volumes are lower and, of course, price is slightly to the downside. I think there's some fireworks as well here in Hong Kong tomorrow.
Usually are.
I saw something that blocked. Well, certainly we're going to miss that. But yes, we can look at that the day after. The story across these markets, yeah. So there's obviously the rally taking place here in Hong Kong. It's the best quarter, I believe, in about a year. So we're also looking specifically at energy stocks, and this is really on the back of why oil it continues not to see more upside. So certainly there is money being taken off the table as far as these energy plays are concerned. This is a regional snapshot of many of those things. Very quickly, just a broad read across these markets as we head into the thick of the Tuesday session. You have Jakarta coming in line. It's worth also pointing out that the benchmark today is getting a lift. So you have Hong Kong, number one, and number two is you have Taiwan coming back online.
Yes.
And that market, as you can see, is at 1.2%. So these concerns around what happens with the Taiwan question, certainly not playing out in equity markets, certainly might be the opposite effect that we're seeing here today, too.
Brush the geopolitics aside, right? Despite what Howard Lutnick was saying, that, Taiwan should help make chips
in the U.S.
In the U.S.
Half its
You're seeing
TSMC
like right now trading at 1.5% higher and really kind of lifting the TAIEX here this morning. So there you go. In terms of what we're watching out for, it is still MSCI China and 5 months of gains that we're set to gain. Really, it looks like today we're set for that, right? After 6 months of gains for global equities overall. So it's been a good quarter. For China, the key thing is the sentiment changing a little bit now, right? Is the data starting to look a little bit better to help maybe keep this market a little bit more longer lasting in terms of this rally, right? The PMI numbers that we got, it was good enough. Maybe not falling off a cliff like the last set of PMIs, but at least things are looking okay.
And if you add that to, I think, what you covered yesterday with industrial profits numbers coming in,
surprisingly
just blew past the estimates as well, right? So you are starting to see some of the policies bearing fruit, early fruit.
Maybe some growth. Pivot to growth. This whole reflation theme seems to be maybe seeing the start of it in some ways, the data. We'll
see what Helen Qiao says. She'll be joining us later on shows to give us really the economic overlay of what's really been a surprising set of economic numbers that's come through so far. Now, all that being said, as far as are we fraught with risk, it's very difficult to, we asked that question earlier on to Kerry Craig, and it's very difficult to pinpoint one specific potential catalyst. Like, what is a known unknown so far? Obviously, very short term is around this time tomorrow, the U.S. government likely shuts down based on the current news flow. Gold is one reason. Well, that is one reason why gold is continuing to rally today. Another day, another record here for gold prices.
Yeah, it seems like gold is the play to express this whole concerns about this U.S. shutdown, which, of course, if it does happen, we still have about, 12 hours or so, or a little bit more, 14 hours before that deadline. If we don't see any sort of resolution there, this does impact the bond market, particularly when it comes to that U.S. jobs report, right? Because they might not be able to release it in time on Friday. The uncertainty itself, we were talking to Gareth Nicholson from Nomura yesterday, the uncertainty of not having that data print is probably going to spark a bigger reaction than the data itself. That was his interpretation of it as well. So a lot of implications of what this U.S. government shutdown could lead to when it comes to the market impact. But yeah, that's why you're seeing gold is at 38.50 right now. Silver is also continuing that rally here. Palladium is flat this morning. But it brings us to Zijin Gold, right? It's the perfect day to list. When you have gold prices at records, we're talking about 60% gains on the first day of trade for Zijin Gold. This is, of course, Zijin Mining's. They hold the international gold assets for the group as well. Here to join us now is Shuhang Jiang, China Basic Materials Equity Research Analyst at Jefferies. Shuhang, it's great to have you. We're talking about 50, 60% gains already on the first day of trade. I got to wonder, how much more upside is there in this stock now?
I think some investors might have concerns whether they can this rally. For me, I think if you look longer term, there's still room to go. So to start with, so our earnings focus for Zijin Gold for 2026 based on $3,400 per ounce price. The stock is currently trading at about 20 times. But as you mentioned, that the gold spot price has already gone to 38,550. Then that means at this price level, the PE multiple for next year is, say, around 18 times only. So if we look at the global peers or just peers in Hong Kong, China, it's trading at about 20 times. So as Zijin Gold, we believe that is the best quality gold mining companies in Hong Kong, China market. So for me, I wouldn't be surprised if investors are willing to give some premium on this name. So that to speak, for me, it's still have around 20% of upside. And if you, this is very near term. So if you look at even longer term, the company still have a lot of opportunities to do M&As, and they can acquire further gold assets in the future. So that still have for this company still have room to grow in the longer term.
All right. Can I just pick up on something you just mentioned there, that this company is the best gold play in greater Chinese markets. Can you tell us why?
Yeah, because I think for Zijin, many people like the company's management because it's has a very strong technical background. And if you look at the company's history, it is very good at doing this turning around stories. So look back in the history, the company acquired, so for Zijin Gold, most of the assets they currently own is acquired. So there are a few mines that when Zijin first acquired, it was suspended due to operation issues, or they were making losses. But due to Zijin has this very strong operation management and technical background, they are able to turn around these assets and turn it into profits within 1 to 2 years. So that speaks, so this very strong track record gives people confidence that it can, for Zijin, it can run these assets to its best potential. And compared to some other mining companies, Zijin is indeed the best if you look at the track record. So I think that's why investors do have this view, and we share this view as well.
How are you looking at the acquisition side of things, right? You mentioned that they do have a good track record of finding these very high potential mines and buying them at a pretty low cost. In terms of exploration and the like, what would you like to see from the company?
So there's a lot of potential in the company, not only in terms of future M&As, but also in terms of the existing assets that are on hand. So with the capital raise in this IPO, like 50% of it is expected to be used on exploration projects on this existing projects. So take for example the Akiam gold mine that they announced to acquire last October and completed this April. The cutoff grade and the the price assumption was relatively low when didn't lead to that big resources when they first acquired. Say they were only looking at say 80 tons, or if you look include a bigger scope, 170 tons of resources. But for Zijin, they see potential to increase that to, say, around 400 tons. So that means they can really explore the potentials of these assets by taking advantage of their really adventurous exploration technicals, and they really see the potentials in those gold mines.
Shuhang, just to broaden or look at specifically the Zijin mining, and I know you have a price target there currently at just below $30. It's now trading at 33. And how do investors need to be differentiating these two stocks from an investing point of view? And do you think do you need to change or raise your price targets because the stock has clearly blown through your 12-month target for that?
Yeah, I think for Zijin mining, so copper and gold price went beyond. I think went beyond people's expectation earlier. So I think myself included, the stream probably have to raise their earnings forecast in the future. And in choosing between Zijin Gold and Zijin mining, I think that partly related to investors' preference, whether they want to have a pure gold play or they want to have a more balanced investment in both gold and copper. And also, one of the reasons that Zijin mining pursued this spin-off IPO is also to achieve value discovery. So before the spin-off IPO, or if we look back few weeks or few months ago, the Zijin mining on total is trading at, I would say, below 15 times PE earnings. And for a mining company in Hong Kong, China market with this quality, I would say that's really undervalued. And if you look at pure gold mining companies, it's usually trading as we discussed earlier, above 20 times. So with this spin-off IPO, I think people would also realize that the asset value in Zijin, both for its gold or its copper assets. So say if we strip off the gold assets in Zijin mining and assume that the domestic and domestic gold mines trade at the same multiple as international gold mines, then the remaining copper value within Zijin is below 10 times. So that's extremely low, and I think that will also lead to some revaluation for Zijin mining as well. Thanks.
Yeah, whether it's a pure gold play or a mix of copper. But yeah, the sensitivity to the gold price and is certainly one we're going to be watching out for as well. Shuhang Jiang, thank you so much. Our China Basic Materials Equity Research Analyst at Jefferies. We got plenty more ahead. This is Bloomberg.
Right, welcome back. Around this time tomorrow, likely U.S. government shutdown. We're talking about 13 hours and 45 minutes. We're slightly weaker across the curve, as you can see, a bit of steepening as well. Let's bring in Mark Cranfield out of Singapore, out of our MLive team, to help us understand the trading actions so far and what this runway mark looks like going into what now seems to be the 15th U.S. government shutdown since 1981.
Well, at least traders have got plenty of experience of how to deal with these shutdowns. They can look at the old playbooks. And I mean, the bottom line, really, from a short-term point of view, is that bond traders, especially when they look at a shutdown, they will say, well, that means that the U.S. government isn't going to spend as much money. Yields are going to come down. That's positive for the market from that point of view. But if you look at and that's also negative for the U.S. dollar, obviously, as well. If you look at the overall themes, which are really driving financial markets, particularly from the equity point of view, you've got things like these AI narrative, which appears to have quite a way to go before people get tired of it, before they think it's fully priced into markets. So a short-term government shutdown isn't really going to make much difference to that, particularly when you've got the earnings season coming up very soon. Investors will be optimistic that the big tech companies are going to continue to produce very decent profits. So unless it's a very long, protracted shutdown, it doesn't mean a great deal to financial markets. If we're still discussing it in a month's time, maybe it really will be a bit more significant. If it's just for a few days, investors will probably look through it and look at the other factors which have been driving markets for a while and will probably continue to do so right through the rest of this year.
Yeah, and it's Chinese markets in particular, right? Mark, it was this time yesterday we were talking about it's quite rare to see, volumes and everything, turnover look like this, leading up to a Golden Week holiday. And we're seeing that in some ways today, once again, on the last day before things shut. How should I be interpreting this, especially when we got that PMI number out of China now, too?
This is FOMO. This is a very unusual occurrence, as you say, going into a National Day holiday. But if you're an investor in Chinese stocks, and you can see what's going on in the rest of the world, you can also see how the stories in China are quite positive. You've got Xiaomi boosting its output as well of chips. The risk is that you go away for a week, Chinese markets are closed, and you come back and the rest of the world has moved on 3, 4, 5%, and you're playing catch up. So it's a rare situation where very few investors in Chinese markets would want to reduce exposure ahead of the holiday because they'll probably have to catch up and buy even more when they come back afterwards. That is not something we see very often, but it is the dominating force for the moment. Of course, there's always geopolitical risk in the background, but there's positive news. There's a report that President Xi is likely to go to the APEC meeting and meet with President Trump. That's a good thing for Chinese markets as well. And that PMI data, although the headline manufacturing was below 50, has been improving steadily since the trough we saw in April, and the private sector numbers are also pretty decent as well. So overall, there's nothing really to dent the mood of investors for the time being as far as the greater China markets are concerned. And so just because you happen to have a holiday coming, it doesn't mean that people will head to the sidelines straight away.
Mark, thank you so much. Mark Cranfield there out of Singapore for us as we go into the last few hours before we head into, of course, that week-long holiday. So we were speaking with Kerry Craig earlier on from JPMorgan Asset Management. We asked him effectively, how do you look at this Chinese market now and what risks are visible, if at all, when you try and figure out the calculus as we, again, go into the last 3 months of the year? Have a listen to how he phrased that answer.
The fact that the CapEx story is quite far behind what we've seen in the US. We're going to have about $300 billion in CapEx in sort of the top hyperscalers in the US. You're getting about $50 billion out of the equivalent ones in China. So a lot of room for catch-up. So I think that's something where you can see more of a longer-term secular theme playing through in terms of the China outlook. Beyond that, there are still some concerns around, where's the fiscal support coming through? How well will this anti-evolution policy actually play out in driving profits higher? And in the meantime, you still have, fairly moderate outlook for growth coming through that's somewhat below that 5% target.
Yeah, so still some risks out there on the radar, and perhaps, what does it mean for this rally, right? You take a look at how as we gear up for Golden Week. This new Bloomberg survey finds that money managers expect the momentum for stocks to actually taper and fade by year end. When it comes to CSI 300, they're expected to end this year at around 4,675. We're at 4,636 right now. So we're just talking about a few percentage points really here. Let's bring in our Asia equities reporter, Byun Song. She joins us here in our studios to walk us through what stood out to you in this survey.
Yeah, so the survey really shows that they're not expecting this strong rally we are seeing right now going to continue. So according to the 21 respondents to our survey, those are the money managers and analysts, they are expecting the CSI 300 to only gain about 1% by the end of this year and only about 5.5% by the middle of 2026. And for HSI, the Hang Seng Index, it's a similar story too, only about 2% by the end of this year.
Were the results surprising? How do we interpret this?
I think it is surprising considering the strong momentum we are seeing right now. And there are also a lot of events coming up for the next 3 months, right? With the Golden Week consumption and also the Trump-Xi meeting at the APEC and also the 5-year plan. So this probably means that there are still a lot of caution on the market right now. And according to the survey result, we indeed see that those lack of a strong policy stimulus and also a lot more trade uncertainties are the biggest risk for the market.
Yeah, we're just showing that the catalyst here, right? Whether it's foreign inflows, policy boosts, AI breakthroughs, and the like. I want to get to the policy boost side of things because when it comes to this upcoming 5-year plan, a lot of money managers have different expectations of what could come out of it and what parts of the market could benefit. What did you hear on that front?
Yeah, actually, more than half of them are expecting AI and chip sectors to get the biggest boost from this 5-year plan, and following with a few other sectors, including infrastructure, new energy vehicles, consumptions, and also real estate. But also, it's really interesting that a lot of them are seeing AI sector is very crowded now. And according to one of the analysts I talked to, he says that now the market wants to see more real cash flows and not only about announcements.
Ian, that was fantastic. Thank you so much. Ian Song there, of course, on the outlook for specifically these onshore equity markets. So we just talked about, of course, the data there and this upcoming 5-year plan. We'll get into all of that as well, coming through with Helen Qiao will be joining us in a couple of minutes here out of BofA. She's, of course, the chief Greater China economist. Conversation is coming up at those times, so in a couple of minutes. This is The China Show.
Here's some stories that we're tracking for you this morning. Google has agreed to pay $24.5 million to resolve President Trump's claims that being banished from his YouTube channel was illegal censorship. $22 million of the settlement will go towards the construction of a new ballroom in the White House, while the remainder is going to other plaintiffs who joined Trump in the legal action. YouTube in 2023 lifted restrictions it had placed on Trump's account after a 2-year ban triggered by the January 6th riot. Xiaomi is confident that its new iPhone rival will exceed the sales of its previous model. The firm says the phone saw record demand immediately after its debut last Saturday. And the company's president says the most expensive variant of the new 17 family, the Pro Max, was the top seller, followed by the Pro. Xiaomi last week unveiled the new devices to challenge Apple's iPhone 17, touting cheaper prices and upgraded cameras. OpenAI is reportedly preparing to launch a new version of its Sora video generator. According to the Wall Street Journal, it will allow copyright holders to opt out of having their work appear on the generator. The report says movie studios and other IP owners will have to explicitly ask OpenAI not to include their copyrighted material. And DeepSeek has updated an experimental AI model, calling it a step towards next-generation AI. The latest version of its platform introduces a new technique called DeepSeek Sparse Attention that's designed to explore and optimize AI training and operation. DeepSeek is also halving prices on its software tools, joining other Chinese startups and slashing costs to attract users.
Speaking of AI, we have at least two catalysts today that we're pointing to as far as this chip rally in China is concerned. One is, of course, we talked about the Huawei's plans in our scoop there of it looking to increase its output over the next 2 years. The other one is this new update to DeepSeek's experimental AI model. And we're looking at, again, gains in the order, I think Cambricon was up as much as 5-6% at one point, still gains across the board there. We're also turning our attention to the movies. This is the tariffs on foreign-made films, and the idea that we might see that go up to 100%. We are seeing the markets react to this somewhat across the region with declines across some of the film-related stocks, and Donald Trump saying that he reiterated his threat to impose that amount of tariffs on foreign-made movies. It's yet to be seen, though, what criteria they'll be using to figure out what would constitute a foreign-made film. In any case, markets are doing that. Plenty more ahead. This is Bloomberg.
$11:29 a.m. in Tokyo. Japanese markets hands out lunch break in just a moment here right now. And take a look at how things are looking. Nikkei is slightly to the downside. It's pretty boring, quiet out there here right now. But when it comes to Asia, we are talking about the last day of September. So yes, we're about to see global equities gain for a 6th straight month.
Can you believe it's Q4 of 2025 already?
Yeah, man.
Oh, quickly, time flies. The look across these markets, as Yvonne is pointing out, there's really not much happening. I think Taiwan is reopening today, so you are getting a bit of a lift there. There are some things to talk about within the Chinese markets. And, yeah, we're mixed on sectors. We're getting a little bit of a lift, again, in terms of the U.S. dollar today. I think dollar-yen, we're knocking on the door of 150 yet again. S&P futures, though, are undisturbed by the prospects of a shutdown this time tomorrow. In terms of data, we did get some that support this industrial profits narrative from, I think, the weekend.
Yeah, so official and RatingDog. We love saying that word now. This is the private gauge, of course, when it comes to PMI. So 50 when it comes to non-manufacturing PMI. Manufacturing PMI was at 49.8. So it was better than expected. Still in contraction, though. And we're talking about 6 straight months in contraction now. The official gauge, though, as you can see there, looking a little bit better than the official numbers.
Let's bring in Helen, Chief Greater China economist at BofA Global Research, here with us to help us understand this. Is the data starting to bear fruit? Anti-involution, what have you? You have industrial profits, and then you have this. But yeah, make sense of this for us.
In fact, I would say the PMI today has been unsurprising in the sense that from the supply side, actually numbers have always been holding up reasonably good. So, for example, if you look at IP, even in the previous 3 months, when fixed asset investment as well as retail sales were weakening, IP were completely fine. So if you relate IP to PMI, both of them are supply side indicators telling us that largely, especially the subcomponents of production, how the industrial sector, the manufacturing sector has been doing. But at the same time, I don't think that this is divorced from the fact that we are seeing, investment is getting weaker and the consumption is probably relatively weak as well. So the gap between demand and supply still remains large.
And yeah, especially the investment side of things in the last data dump was quite underwhelming, right? Especially when you're not even seeing the state-led sort of investment into the economy as well. You're still thinking that we're not going to see any major stimulus despite the weakness in domestic demand. Why not?
Exactly. I think the key is because that in the first half, we have had a relatively solid first half at 5.3% GDP growth. And that really cut some slack for policymakers for the second half because the whole year growth target is about 5.0%. So even if that they see some deceleration in sequential terms and year-on-year terms in the second half, there's no rush, no urgency in terms of rolling out more policy stimulus. So in that regard, our view really stands out relative to consensus where people are saying that, there's got to be some demand-side stimulus, otherwise growth is going to, collapse in the very near term. We don't think so. Actually, demand side is not doing very well, not for the first month. This is already the 4th month we're talking about. But supply side is holding up reasonably okay. Yeah. From policymakers' perspective, full year is almost there, and then there is no point of actually, doing much more at a time when, industrial production is still 5-6%, PMI, looking pretty good. And at the same time, employment, if you look at the sub-index, is also holding up pretty well. So in that scenario, we think that this is a muddling through without the help of policy stimulus.
The next 5-year plan is coming soon. What do you think we should be watching out for? What will be the centerpiece of that?
I think the key is probably about the structural reform agenda, which is more diverted to rotate the growth driver away from investment towards consumption. Okay. So the government is probably going to pledge that they are going to help boost the consumption more by expanding the social welfare system. If that is the case, I think that potentially looks very bullish because that's where China is supposed to be heading to. And by the way, even probably Treasury Secretary Scott Bessent would also agree that this is a good idea for China to grow more driven by consumption. And at the same time, social welfare, expansion is always something that we think could potentially help consumers feel more confident when it comes to spending. They can potentially reduce their precautionary savings and then spend more out of their disposable income at services as well as goods. So when that happens, and potentially, there are street talks that maybe they will set up a goal, even a target to grow private consumption by 30% in 5 years. If that is the case, I think that the market investors would generally be bullish.
We've been talking about this whole dichotomy between the markets, liquidity-driven, and what's going on in the economy, the macro side of things. And everyone, we're just talking to Chen from CSOP about this. The amount of household savings is still there. They're ready to be deployed. And they will probably look into the equity market as a source of maybe deploying that capital. How are you looking at this right now? Do you think that we are actually going to see a lot of money taken out of accounts into this sort of wealth effect that people are expecting?
Well, good question. I would say that at this point, we are also seeing this really widening gap between macro fundamentals on the demand side, especially, versus the rallies in the stock market, and also even to a certain extent the bond market, because we're not necessarily seeing inflation. In fact, if demand continues to weaken and supply remains relatively stable, the gap between the two is probably implying more persistent deflationary pressure. So you can say that maybe there is more that macro fundamentals cannot justify at the capital market at the point, which can be better justified by the liquidity level or its flows, or potentially macro catalyst. For example, I would say, in the near term, what will probably, get investors more excited? The news of a fourth plenum, Xi and Trump meeting at the end of the month, or potentially a set of, I would say, relatively weak set of activity growth indicators that may come out at the end of third quarter. So basically in 2 weeks' time, when we look at the data and then we were like, okay, it doesn't look necessarily that good. Would the market worry about it or shrug it off and move on? I don't know. It looks like that right now the sentiment is more tilting towards the latter. And it more looks forward to what could potentially be announced for the next 5 years, and how about the China-U.S. relationship. So those could potentially be the main drivers.
The PBOC released a statement, I think it was Friday on the weekend, the quarterly monetary policy statement. Right. I think they introduced language around supporting the equity market and the bond market, something to stabilize the market. How important do you think the market, a healthy market is in terms of the broader mix of economic policy?
Well, David, we have to look at what they say and also look at what they do, right? They may say this, but we don't know how much will be done. But indeed, it looks like there's more focus on the market. And I think what they're trying to convey the message is always that a healthy financial market, especially with a slow boom, right, in stock market and also a relatively healthy, bond market will be very helpful to the macro fundamentals. And we believe that will be the case. What they're really afraid of is seeing a very sharp slope in either way. So either it goes down very quickly or it goes up very quickly, policymakers will be worried. As long as you're slowly but surely approaching a certain level, that's okay, either on the upside or downside. So I don't necessarily think that policymakers have a specific goal. Let's say A-share going to 4,500. Right. I don't think there is anything like that. But they are more caring about, let's see, the slope of changes, and also like what Yvonne was saying earlier, whether for households, whether they are relocating their long-term savings towards somewhere that can earn them better and safer, returns in the long term.
Golden Week's coming up. Are you optimistic? Are you
I'm not traveling.
But are you optimistic about what we could see in these next 8 days?
Well, I think that what is coming out is potentially going to look reasonably good. I think that at this point, people, when they're not necessarily thinking about buying properties, more are actually diverting their disposable income into services such as traveling. So when people are, I was just in London recently, a lot of investors are asking, when property prices are going down so sharply, does it mean a very negative wealth effect on spending? In fact, we have not seen such pronounced impact on spending. Instead, we see the crowding in effect when people are not saving so much, into the down payment of the next apartment. They actually can live a little, right? They can spend a little, and we think that maybe the Golden Week will be the time when we can put it to test to see whether retail sales shows a little bit of more improvement there.
Well, speaking of, how did we track in September as far as the activity numbers are concerned? So in other words, in 2 weeks' time, the activity numbers for September, how do you think they'll look?
Well, I would say that we probably are going to see IP holding up reasonably well. Of course, let's see how exports is going to fare. But my suspicion, based on the PMI today, is that IP is going to be still in the ballpark of 5 to 6%. But I think what worries me would be the continued divergence between retail sales and fixed asset investment, which drifted lower and lower, versus the IP. So what I worry about is that in year-to-date terms, we could start to see fixed asset investment drifting towards zero. It was already close to zero last month, and at this pace, we can probably see it dripping into negative territory very soon. Well, this doesn't mean that investment growth is negative, because fixed asset investment is a nominal series. Okay. So when we deflate it with a PPI deflation in place, we probably will still have positive, slightly positive gross capital formation investment growth. But that said, I think that still sends a very strong message, which is with the anti-involution campaign in place, etc., new capacity is prevented from being added, and we are seeing, the overall economy taking a toll on the demand side. And that would imply that if you continue to push for the supply side expansion on a stable level, and however, your demand is not strong enough and you don't want to stimulate it because you feel complacent, then the big gap in between basically means it either has to be exported or it has to be turning into inventory at home. In either way, there will be deflationary pressures either here or overseas.
Helen, thank you. Helen Qiao there, Chief Greater China Economist at BofA Global Research. Coming up, Washington pressures Taiwan to move more chip productions to the U.S. We have details coming up next. This is Bloomberg. Washington is pushing Taiwan to move more investment and chip production to the U.S. There, Commerce Secretary Howard Lutnick told local media that half of American demand should be manufactured locally. Let's get to our Asia tech correspondent, Annabelle Jewelers, with more on this. Tell us the reasoning behind this.
The reasoning is essentially the US has been long concerned about being too dependent on TSMC specifically, but Taiwan and the broader ecosystem around TSMC as well. So this push has been going on for a long, long time now, predating the Trump administration, to force Taiwan or to put pressure on them to move more of their advanced chip facilities to the States. So far, TSMC is sort of held back from having the most advanced technology there, but still, I mean, we're starting to see that shift happening. We can get more on that in just a moment, but we did have an interview that Howard Lutnick, the Commerce Secretary, had with NewsNation, US media network, overnight, and essentially he said that their goal is for the Taiwan companies to be making half of US chip demand in the States. That's what they're wanting to, again, try and reduce that over-reliance.
And how is Taiwan, or how are Taiwanese companies responding to this project?
Yeah, so this is an interesting one because actually just this morning there's been some local media in Taiwan reporting that TSMC is looking to speed up production of their Arizona, a new plant in Arizona, that they're actually going to be trying to bring it forward by 1 year. This is according, again, to local media here, Economic Daily News in Taipei, but they're looking to bring that forward to 2027, and this would have up to 2 nanometer production, the A16 process as well. This is the cutting edge of TSMC technology. So it is notable because, again, going back to what I was saying about TSMC. Yes, they do have a couple of plants in the US. Yes, early this year in March, they announced a huge ramp up in their production plans as well to have a lot more plants and R&D facility as well, advanced packaging facilities. But they still have continued to keep really their most sophisticated technology on the island. And this does sort of, I guess, signal a shift. But the broader issue also becomes it's really the ecosystem around TSMC, and you continue. I often speak with Taiwanese companies and about their willingness to move abroad, and it's just so challenging on so many different levels: labor, costs involved, actual demand for their products. It's not just a simple thing of setting up in the US. Yeah.
There we go, Belle. Thank you so much, Annabelle Jewelers. There really on just a underappreciated complexity of just moving a supply chain from one economy to another. Underscores really also the geopolitical overlay here, right? So you have sources, and you guys have heard about this big story, of course, sources say the Chinese President Xi Jinping is pushing President Donald Trump to oppose Taiwan independence. Now, the wording that would mark a major diplomatic win for Beijing and really comes as both sides seek this trade deal.
Yeah, our Bloomberg Opinion columnist Karishma Vashwani says that such a shift would be a major blow to the island and would brand Washington as an unreliable partner in the region. She joins us now from Singapore. And yeah, your column, will U.S. trade Taiwan for TikTok and tariffs, just highlights how interesting, Taiwan plays into this all. What's at stake here?
Well, there is so much at stake, Yvonne, and I found it really interesting, just picking up from where Annabelle was talking about TSMC and being pressured to invest more in terms of manufacturing in the United States. Now, if you look at the relationship between President Donald Trump and China, particularly in this term, I think it's fair to say that it's been defined by the 3 T's, as I say in my column, and that is TikTok, tariffs, and Taiwan. Now, Taiwan is at the geopolitical heart of this because, of course, Trump wants a deal when it comes to trade. He wants, he has sort of moved and maneuvered a deal on TikTok. But what China wants, what the red line for Xi Jinping is to get that ultimate prize, the legacy-making goal that Xi has stated very publicly, and that is to unify with Taiwan either through peaceful means or by force. And these reports, of course, coming out that Xi Jinping is looking to have a discussion with Trump at some point, if indeed that meeting does go ahead in October between the two of them, where he might push, according to the sources that we've been speaking to, for a change in this diplomatic language that has defined the relationship around Taiwan between the U.S. and China for decades. Now, if this were to happen, and it's a big if, currently there are no indications that that could be the case, it would really upend the diplomatic delicate dance around the geopolitical stakes of this island that we know it as it stands. It would send a signal to Japan and Korea that security could be at risk in the Indo-Pacific, and it would certainly send a signal to Southeast Asian countries who are hedged between the U.S. and China, rather, I should say, that Washington is an unreliable partner.
Yeah, I think, if we get to that point, being vague, ambiguity is not enough, right? So say it effectively. And how big of a shift would that? What would that mean? That change in the wording and that old language on Taiwan status. What does that entail? How do I need to be thinking about the changes that comes from any potential change there?
Yeah, so strategic ambiguity is the way that the United States has managed its relationship with Taiwan. And effectively what that means is that it adheres to the one China principle, but at the same time, it allows Washington to be able to deal with Taiwan in the way that it wants, selling arms to it, for instance, and having unofficial relationships with it in the sense that, for instance, there is a sort of de facto embassy in the U.S. where Taiwan representatives have relationships, conversations, discussions with U.S. officials. Now, this has worked for decades, but it really annoys China, which has done its best over the last few decades to find a way to diminish Taiwan's diplomatic status. And interestingly, in another column that I wrote last week, for instance, that relationship was highlighted again when Taiwan chose to weaponize its chips diplomacy for what appears to be the very first time by actually saying to South Africa that was trying to push one of Taiwan's representative offices to another part of the country ahead of a meeting with Xi Jinping by saying, look, if that's going to happen, you're not going to get access complete access to our chips. Now, this was ultimately suspended, but I think what it shows is a recognition in Taiwan, and certainly by President Lai, that his island is being squeezed again and again by China and this relationship with the United States.
Is there anything then that President Lai Ching-te can do?
Well, you know, he's in an unenviable position, Yvonne. He's being squeezed internationally, and he's also being squeezed at home, particularly when it comes to trying to push through some of the things he would like to see in the legislature. Now, one of the key things that the Trump administration has demanded, not just of Taiwan, but of countries around the region, is more defense spending. He really needs to be able to find a way to get opposition parties on board to be able to do that and to push through what he has said in the budget. And I think the other thing that would be very useful is to try and find out exactly how to give Trump what he wants. Some of the things, for instance, as Annabelle was talking about, more of an increase in manufacturing in the United States. But at the same time, he's got to ensure that the silicon shield, which is what Taiwan's precious gems, precious assets, those chips that, you know, can't be made anywhere else for now, they retain control of that, because that is what lies at the heart of this and what makes Taiwan so unique and so special, both to the United States and to China.
Karishma, thank you. Karishma Vashwani there, our Bloomberg Opinion columnist. Make sure to check out her column this morning. We got plenty more ahead. This is Bloomberg.
Right, welcome back. Just a look at some of the major market themes today. The big listing, of course, here, 67%, biggest listing since CATL back in May, biggest IPO if you think about it, first time listing ever anywhere. Yes, raised quite a bit of money. Could have raised more if you think about it, but anyway, you leave that to the secondary market too. It's a question of, you know, do you want the government to spend the money for you, or do you want more taxes? But yeah, that's a different issue altogether.
Yeah, what a day for Zijin Gold.
Yeah.
And certainly just before markets shut for the Golden Week holiday. So certainly we are still seeing a lot of momentum behind this market and this whole rally in general. And take a look at when it comes to, we're watching very closely some of these movers, everything from chips, also this big debuts as well. It's not just Zijin Gold, right? Yeah. We're talking about Shenzhen High Pine Precision Tech and Pateo Connect. I don't even know how to connect. Yeah, there you go. Oh. All tech plays. 254%. That's nuts.
Well, clearly they left money on the table. But that's just to say it's really been a piping hot equity market. And I think, Dave, you know, the logistical issue now on the part of the Hong Kong Exchange is really how to fit more than 3 gongs on that stage when you get more than one listing here. I think they had 3 brass ones today.
Didn't we have, there was that one day there was like 9 or 6 or 7, I remember.
Yeah.
Yeah.
Feels like a...
They have a lot in the back somewhere, probably, they could bring up.
Yeah, I think they took that from some of the nightclubs that closed recently here in Hong Kong. I do remember some thematics there.
They had a gong campaign, too. They brought all around the city. Yeah. There you go. CSI 300, we're flat right now. But yeah, materials doing quite well. That's it for us here in the China Show.
See you tomorrow.